Hello everybody, welcome back for another video. Hope you're all doing well, hope you're all doing fantastic, hope you're all having a great day. I'm feeling a little bit better, so the video should flow a little bit betterer than the last 2 days or so. Get ready. So you know how I've been saying for years, there's a lot going on. There's a lot more going on right now. So without any further ado, let's jump right into it. If the video sounds crazy, it's simply the state of the way that things are. I don't know how to help you. Everything is kind of a mess right now. So not some of the things, like everything. Economic policies are actually falling and collapsing. We are witnessing actively right in front of us the actual demise of fiat currencies. We will probably have them around for another 50, 60, 70 years. I know that sounds counterproductive or weird, especially being in the cryptocurrency space, but fiat in some form or another will probably always exist as a counterbalance to whatever new thing that we're moving in. Since 2020, and dare I even say 2008, 2009, the world and economic policies have continued to rotten over the course of that time. What we're seeing now is when you hear people say that there's the wealth transfer that's going on. We've gone over that before in this channel for those of you who missed it. There are multiple active wealth transfers going on right now. You have the wealth transfer from the people who were born in the 30s, 40s, 50s, 60s. We're getting older and they're passing on the money that they have to a younger generation. They're literally transferring their wealth. You have the wealth transfer that we're seeing when it comes to assets for people who, forgive my French, who aren't passing, who are still here. And it's moving from the hands of, and I don't care for the terms, weak hands to diamond hands, but it's more of a, people have figured out that homes are a great way to make money. So therefore, they're making sure that they buy up all the homes, or they buy up all the stocks, or they're buying up all other assets. And then we're also seeing this other transfer within the cryptocurrency space from people who were not in crypto, who are moving into crypto, the money that's being moved into the cryptocurrency space. People who bought Bitcoin years ago for $35, they now have 70,000 something or other per Bitcoin. That is a literal extra transfer that's also taking place. And this is why the expectations are. And we have also seen wealth rising in people who have gotten into the crypto space. One of the faults usually being is that people hear that over the course of a decade that people made money in crypto. They jump into the market. They expect to make hundreds of bajillions of dollars overnight. They don't make that same amount of money in a week. They leave the market. Those coins flow right back to the people who already have the assets. The world's economic policies. Now, I am not an economist. I did not go to school for economies and monies and all these other things. But if it stands out to me as something is bad, that usually is an issue. The inflation rates that we have that governments cannot and will not be able to get under control are only going to get much worse. We're in this really weird paradoxical state where we keep hearing that things will be gotten under control. They're never put under control, and we know that they're only going to get worse from where they are. I was just having brunch and dinner with, I guess, my best friends. Hello, if they're watching. And we were talking about the state of the world. Now, allow me to be frank for 1 second. We were talking about the markets and movements, and I was, this is what we always do. We are a very weird friend group. We always meet up. We have so much to talk about. And then, we go, hey, how's it going? So did you see the prices drop? And it's literally all we talk about for a good 6 or 7 hours. It's just our thing. We were discussing the housing market. We were discussing buying property and trying to find like essentially good deals and finding the best places to like do Airbnbs and stuff like that. Then we were talking about interest rates. And then we were talking about the cryptocurrency market, the lack of relative movement of Bitcoin over the course of the basically 3-month period that we've been seeing. But then we were talking about the idea of owning assets. So I told them I watched something where they were, I keep getting recommended a lot of these videos where they're talking to like older individuals who cannot or will never be able to retire. This is why I have a very big thing whenever I talk about pensions and they're like investing in Bitcoin. I'm like, okay, cool. Like we know that Bitcoin's going to be around for a very long time because the pensions are investing in it. And they were asking these people as far as like assets and what they had. And everyone had the same exact answer over and over. Everyone. They don't have the assets. They don't own anything. They don't hold anything. They never wanted to buy anything. When they were younger, they wanted to have fun. It's the same kind of spiel over and over and over. I was young. I didn't care. I got into my 50s. I kind of cared. I got into my 60s. My bone hurts. I can't go to work and do stuff like that anymore. So we were, also lightly mortified at the actual discussion of it. But then we were like, okay, so clearly the people who, and I would say like do best or will do besterer. And why am I not speaking English properly? Who will do the best in the future are people who actually have the assets. And where you can see the consolidation of assets right now. You can see it. When we talk about the people who are buying up all the homes, when you actually look at the movements of like stock buying and stuff like that, and I'm not talking about the entire GameStop GME thing that's going on. There was a discussion a couple of months ago online, and they were talking about how family offices are buying like basically everything that they can. They realize that even when it comes to stocks, even if you have a stock split or if they issue more stock, you're kind of rushing to the table to get what you can before everyone else is doing it. And at a certain point, there isn't, more going to be issued. This is why stock values go up, because people are holding, they're not selling, the demand goes up, et cetera, et cetera. Same exact thing with housing, same exact thing with stock, same exact thing also with we're seeing with crypto right now. So basically, long story short, we are witnessing in real time this shift of money, this movement of terrible economic policies, and the people who understand or have a light idea of what's happening to the world right now. And they're positioning themselves in a way because they know that governments can't and won't be able to fix what happened. It's difficult for me to explain completely without having to go through like a whole nother rambling on thing. But the only way that 2008, 2009 was fixed was basically by printing more money. And the problem is that they printed enough money that it kind of made the issues go away. But then the system kind of became hooked on the idea of, well, we just print more money to make ourselves richer. Inflation going up is not really that much of a problem because the asset values will go up. Therefore, people who are holding assets, you can even see this right now, based on the 3 or whatever percent that they keep saying that inflation actually is. What inflation really is when you go to the supermarket or trying to pay your rent and it's more than 50%. And you see that over the course of the last 4 years, the stock market, crypto, and everything has outperformed the level of real inflation by around 150% or whatever the actual number is. So the idea of what happened in 2008, 2009 was they printed more money. By the time we got to, I think, 2015, 2016, there's some documentaries where they're actually talking to the policymakers from that time. And they were asking them very candidly. They said, did you guys know what you were doing? And they said, absolutely not. They said, we had a whole bunch of ideas on the table. And then somebody was like, well, we can print more money. Like, we're the printers. And they were like, cool, let's do that. And they realized that it kind of alleviated a lot of what appeared to be stress, because if you saw that inflation went up and you went to your boss and you were like, hey, I need to make more money, they simply just matched inflation. And therefore, you were making more money on paper, but compared to inflation, you weren't actually making anything. So they said by the time 2020 rolled around, they also had no idea what to do. What do we do to make sure that things kind of stay afloat? Because for those of you who don't know, similar to 2008, 2009, and to 2020, the economies were going to become dust. That's not like overstating it. No, like we were on the verge of this terrible system that's like being held up by paper clips, toothpicks. Toothpick sounds better. Dental floss. completely obliterating and collapsing, which would have devastated a larger portion of the world, but we'd also be in a situation where it's kind of one of those, oh, like you look back and you go, I'm never going to do that again. Where we are right now is we're kind of in that same exact situation, but a lot bit worse. Nothing was solved from 2020 to 2021, except that they turned on the money printer so much that it actually caused all markets to kind of like get bigger and more money flew into them. And the people who held the assets once again became the people who were richer. But now with the money printers having turned off, they're just simply slowed down. And even with a slowdown and people still taking out debt and not really caring that the interest rate is 7 or 8% or wherever people are living, we're still seeing these higher levels of inflation. The issue is that the only thing that they can do is turn back on the money printers. There's not a situation where they can simply go, okay, we're not going to print money for the next 5 years and everyone has to deal with it because debt has to be paid back. The GDPs of these larger countries has to also rise. But then this also squeezes us right in the middle where the economies are doing really bad. You see assets doing well, so therefore people conflate the idea of seeing the stock market doing well with being like, well, clearly everything is on the up and up. And it's like, it's very specific things for very specific people. If things don't change, we are probably this is not meant to scare. This is more of a realistic thing. We are going to dive quite deep into a recession, really bad. So the problem is that interest rates need to be lowered across the board multiple times because that's the way that the system works. It's not me saying like, this is the only way. It's the only way because it is the only way. Interest rates have to fall across the board. This is why you've seen other governments recently like lowering their interest rates. It's the only way to alleviate pressure. The problem is that the moment you lower interest rates, assets begin to rise quite quickly. There we go. Once again, the people who are holding assets make more money. Why do they rise quicker? Because there's more money and more debt being created because the cost that you have to pay back to issue that debt also decreases. There are a lot of people don't understand that a lot of the stock market is actually running on debt. People take out debt to like actually pay for their positions. Same exact way that you would go, I'm going to take out a mortgage to pay for this home. There are a lot of people who go, well, cool. We know exactly how to long or short X, Y, and Z. So we're going to take out a loan of about $100 million to play with the market. And they know usually that their positions will be filled or whatever the case might actually be. And then they go, okay, cool. We made an extra 50 million. Let's pay back the 100 million. But once again, it's all running on a huge amount of debt. So this leads us to multiple discussions that we're going to be having in this video because I think we are in for a wild ride regardless of what actually happens. No matter what takes place now, we are at the behest of kind of chaos, if you will. Arthur Hayes, incredibly popular. He's become more vocal on Twitter the last couple of weeks. I'm not really sure why. Maybe he's getting more electrolytes. Arthur Hayes says it is time to go long on Bitcoin. The former BitMEX CEO, known for his no-nonsense, style, has released an essay titled Group of Fools. In it, Hayes explains why he believes Bitcoin is set to rise thanks to various macroeconomic factors and central bank policies. One of the ideas is that the reason why we're seeing so much money being pumped into Bitcoin ETFs, why the BlackRock Bitcoin ETF is the best performing ETF that has ever existed on this planet, is because basically the people with money see that the current economic policies cannot and will not be fixed. And basically they have to like diversify into Bitcoin. This is why whenever we keep hearing just based off of basic supply and demand, the prices of where Bitcoin's going to go, $1 million at this point, and so and so and so. This is all based off of the idea that the US dollar will continue inflating. If the US dollar continues inflating, even the same exact levels that we're seeing right now, even know that it's a lot higher, Bitcoin has to mathematically actually go up. And it's just based off of people seeing how bad the other system is and people normally putting their money inside of it. And this is always a discussion of us talking about This is just, and I air quotes, just with 100 million people who are into Bitcoin, and then the other is 7.9 billion people catching on and going, okay, that's what's going on. So they start pushing their money into the market as well. But there's just so much to. Do you understand like what we're living through? Like we are seeing the like history. This is going to be in books or beamed into people's heads in the next 30, 40, 50 or so years as people talk about like terrible economic policies that have happened. There's no way out for the old system. And that's not me being like, I'm a crypto believer. No, like they've boxed themselves into a corner. You either let inflation continue rising this way and you destroy the entire economy and people's bank accounts and they have no other choice but to put their money into assets, and then money flows into Bitcoin. You lower interest rates multiple times over the course of this year. Like you've seen like the markets react every time that they haven't lowered interest rates. You have to lower interest rates because the market needs more money and more debt to be pumped into it because everything runs on debt. The government needs to print more money to pay off their debt. They inflate their currency to pay off the debt that they have while devaluing the currency that they're creating. It's a loop that they cannot get out of. It's impossible to stop it at this point. So whenever they say that they're not raising or lowering interest rates or moving them sideways or up and down, this is why the markets always tend to react. But the moment they begin to lower them, which is all that they can do, assets begin to pump. But then so does inflation. And then inflation continually goes up, and then they go, okay, well, inflation's back at 7 or 8%. So we have to stop interest rates again. Markets collapse. People like things end up falling, and all these companies end up once again announcing that they're having a whole bunch of layoffs. It's a circle that they can't get out of. When you hear the significance of me talking about, for those of you who missed it the 3 times I said it, Bitcoin has been around for 15 years. 15 years. The US dollar has lost 99% of its value to Bitcoin in 10 years. We are witnessing the end of a book. It's not even a chapter. Like we're moving to a whole new book that is being written right now, and we're a part of it. Hayes says, by discussing the dollar-yen exchange rate, for those of you who haven't seen, the Japanese economy isn't doing too hot. That's due to a number of factors, included but not limited to. In the 90s, in the 80s, people thought that Japan would have like the economy that the US does right now. But there were a bunch of hiccups and mess ups in the 90s where people were basically like, okay, whatever. So the Japanese economy has been relatively stable, but their economic policies in 2020 and 2021 completely messed them up. And people were actually like looking to Japan to be like, wow, how are they completely doing so well? And now that they're doing the only thing that they were actually able to do, the Japanese yen has collapsed, like completely fallen, and has continued falling. I told you I have a friend, he booked a trip to go to Japan. Like he's still going, like specifically because of the collapse of their yen. They have a rapidly aging population. They've had a number of, dare I say, border policies that basically made it very difficult for people to like move there. And the problem is, the point is, to keep it light, no one's making whoopee, if you know the term. The population keeps aging. They have terrible economic policies. People there already are not making a lot of money. And now they need new money flowing in. So you keep devaluing your currency to make it attractive to people to go there and like go on holidays and stuff like that. But then afterwards, these people leave and that money stops entering your economy. This is what's currently happening in multiple other countries. And you might remember, we've been talking for the last 2 or 3 plus years. This is what's happening with Turkey. Remember all the videos you've seen and all the people who are going to Turkey and staying at 5-star resorts because they've destroyed their currency. So it's super attractive to people who want to go there for a week and a half, go walk in the sand and, live their best life. But then afterwards, the people who are actually living there, they're undergoing the system of the 60-70% inflation rate, the 60-70% interest rates. This is where Japan is going. And part of the problem is that all the major countries are going through it, but people keep pointing at the worst one and go, that's the problem, when they're all slipping and sliding at the exact same time. Hayes says, by discussing the dollar-yen exchange rate, which he calls the most important macroeconomic indicator, he recalls his previous essay, The Easy Button, where he suggested that the U.S. Federal Reserve should swap unlimited amounts of freshly printed dollars with the Bank of Japan for yen. This would allow the Bank of Japan to support the yen in the global forex markets. Essentially, the only way to get out of this problem that you've all created, that we've had, since well before the 70s, but 1971 definitely triggered it, is to basically you now need to print so much money from the world reserve currency and swap it with the yen to actually support the yen so that the Japanese economy can actually go back up. But then what you've also done is create a huge amount of extra money flowing through the U.S. economy from the U.S. dollar that was printed, inflating further the U.S. dollar. While Hayes stands by his solution, he notes that the G7 central banks have opted for a different approach. They aim to convince the market that the interest rate gap between the yen and other major currencies like the dollar, the euro, the pound, and the Canadian dollar will narrow. If the market believes this, it will push the yen higher and devalue other currencies. For this strategy to work, Hayes says the G7 central banks, including the Fed, European Central Bank, the Bank of Canada, Bank of England, must cut their high policy rates. The Bank of Japan, with its policy rate at 0.1, stands in stark contrast to these higher rates at 4 to 5%. Hayes explains that the interest rate differential between the home and foreign currency fundamentally drives exchange rates. If I remember correctly, I think Japan had a negative interest rate. Like not at zero, I think it was negative. And I think, so when you have a negative interest rate, I think you actually pay people to have a bank account. I think that's the way that it works. Pretty sure. From March 2020 until early 2022, everyone played the same game. Free money was handed out as long as people stayed inside. When inflation surged, the G7 central banks, except the Bank of Japan, raised their rates. It was the only way to try and get things under control, or inflation would, even on paper, would also be far higher. The Bank of Japan couldn't follow suit because it owns over 50% of the Japanese government bond market. If the Bank of Japan allowed rates to rise, it would face catastrophic losses in the JGB holdings. And then he starts talking about Janet Yellen, and he actually calls her bad girl Yellen, and that got a little bit too weird for me. So we're pushed from all sides right now. We are pushed into a massively terrible corner, because the only way out of this is printing more money. This is why you keep seeing the market and people completely losing their minds over anything that has to do with the interest rate. We've gotten to, and I, once again, being completely frank, we've gotten to the point where like greed is quite rampant in all these markets. And it's because everyone knows what has to be done, and everyone knows that they want and essentially also need to make money. That was part of our discussion. If you see the way that the world is now and you don't want to play that game anymore, what do? You invest. If you see that economic policies are getting worse and only going to worsen as time goes on, and the only people who are able to escape this cycle are the people with assets, you invest. And this is what I think is why we're seeing this huge amount of, even though, so if you look at even the Google trends, like a very few people are actually Googling the word Bitcoin. I posted something on Twitter and I thought it was hilarious. It was showing that, when Bitcoin's price is 74,000, everyone's like, oh, I wish I had bought some. Bitcoin goes to 66,000. Everyone's like, I'm not buying that thing. Bitcoin's overvalued, that kind of thing. But people within our market, the people who've been here for a long time, you can feel kind of the greed in the air, because we all know what has to be done. We all know that the prices have to rise. We all know that things have to go higher. we're witnessing, and I applaud you for being here, having been here, for being in the market, for being in any market. We know what's going on. Even if you don't understand economic policies to a T, you get that the only way out of this madness is by having assets and by having some form of passive income. That's why I mentioned before, about a month ago in another video, I was like, you know that like when the market goes wild and goes completely crazy and people start taking profits and stuff like that, please don't buy a Lambo. Please don't buy a new dog. I don't know what people plan. Like, you need assets right now because things aren't going to get any better for other people. People who don't have assets, how many of you, show of hands, know people who have no assets, no money saved, no emergency cash? They have no crypto. They have no stocks. I would dare even say bonds. They have no real estate. They have nothing. These people are never going to retire. There are people now who can never retire. There are people in these documentaries, no money saved, 68, 69 years old, 73 years old, talking about how tired they are. I have no assets. I have nothing. All they have is a pension that's not even covering their rent, so they have to go get another. Like, some of these people have 2 jobs. Then this sets you up in that situation where, of course, the people who are into finance, who are paying attention, why everyone's going completely insane right now, why everyone's buying everything up, why we're getting this tension in the cryptocurrency markets, because we know that prices need to go higher relative to everything else that's also happening. And then to top it all off, you have all these countries who for the last couple of years plus keep going on TV talking about, okay, things are okay. Things are just fine. When you hear these, all these like job numbers, and it's like, no, those numbers are absolutely ridiculous. Especially, whatever, we don't have to go into that. When you hear, and I was saying before, like, you can even look it up. Once again, if I ever say anything that sounds off the cuff or insane, please go Google it and look it up for yourself. When you see these like job numbers, even a lot of times for jobs that have been created, a lot of these jobs are just there on paper. They're not things that are going to actually be filled. When you look at like the actual job loss numbers or joblessness numbers, those numbers also aren't correct because they're only going based off of the people who are at that moment allowed to actually get some kind of benefits. Those benefits eventually run out. You're not allowed to reapply. So over the course of a 6-9 month period, you're on the roster. You know, jobless numbers have gone up to 600,000. Those are the people who are currently like, hey, I can't find a job. After that 6-9 month period, you're off that list. You're no longer considered jobless. Like you should have found something. That's how the system works. So when you go off that number and then jobless numbers fall down to 440,000, the numbers then show or assume, well, those 160,000 people must have found a job. That's not how it works. You're also missing the other people from the last 4, 5, 15 years who haven't been able to actually find a job. Do you think the jobless numbers in the United States are only 300,000 people out of 300 million people living in that country? Of course not. The numbers are constantly thrown on TV to make it seem as if things are okay. I've gone over that before. You can stand at a podium as many times as you want and say, well, we're not going to lower interest rates because, you know, the inflation rate is 3.4 when it was 3.5. We're doing okay. And then you look at the news and people are like, why is chicken 3 times as much as it was a year and a half ago? Have you seen those videos? There's a video, multiple of them. These people are going to Walmart, Kmart, A-Mart, B-Mart, all these different letters, normal supermarkets as well. And they're weighing their poultry and all these other things. So like it'll say on the thing in US numbers, it'll say like 1.5 pounds, $5.49, and people are weighing it. And it's like half that weight. It's not a pound and a half. Like the numbers don't, like, they're being overcharged. It's kind of one of those things. I don't know if you ever seen before when people had like actual like weighing things in the stores where they would like put their thumb on it as they're weighing it to like make it weigh heavier so they could get more. This is also happening. It's nuts. It's completely nuts what's taking place. Like, we are living in the midst of this like crazy thing. And I don't know. I think one of the very few saving graces for a lot of people is going to be being in a market. This is why I think we're also seeing this like GameStop frenzy right now. People waking up making 25%, of how much money they put in. Is the same exact thing with crypto. Whenever the market does go ripping and roaring and we're over 100K and all these other things, people will begin to flood into the market because it didn't register to me before completely. People get into these markets because they know it's the only way that they can make money and like continuously make money and make like a good amount of money that they won't be able to make from having a normal job. But then that's where all like the really annoying FOMO ends up coming in. Once again, people see that Bitcoin's price is down. They don't buy into it. The price goes up or goes far above where it was before. And then they start putting money into it, not realizing that they realize after that they could have made a good amount of money had they gotten into the market early. It's a really weird market dynamic that continuously happens over and over. So I hope for this cycle, this run, that people like really make a huge amount of money, because I think we're sliding into something that can't be undone. There's no way that this is going to get better. This isn't me trying to scare you. It's just like complete logic. If you look at the charts from 2008, 2009, it's not going to get any better. And world governments and the people who are printing the money, they're not doing well. There's like a huge scramble that's going on. The only thing that they could do is announce new economic policies to really get things under control, not printing any more currencies for the next, 5 years, really stabilize, not have inflation go up, have us at an inflation rate as low as humanly possible so that people can get back on their feet. But that's never going to happen. Yeah. I don't know if a lot of you have even been looking at the news or been reading like economic news and stuff like that. I mean, do it if you are, and I say the word strong and I mean it. Because it's a lot. It's a lot to take in. It's a lot to look at. There's so many other things with you. Every time I talk to someone, life is rough right now. Like there's so much going on. There's so much happening at the exact same time. And then on top of it, you have to deal with money and you have to deal with these economic policies and you have to deal with going to the supermarket and your rent going up and your insurance policies going up, water going up, electricity going up. And you're sitting there like, that's why I say if you're strong and you can digest it, the economic stuff is rough. I think personally, this is why BlackRock, Fidelity, and all these other companies have jumped on board. I don't think that the timing is random. I think that they know like something is incredibly wrong. When we were talking a couple of weeks ago, for those of you who weren't here, and we heard, this is news that keeps happening every single day. When we heard this news that there were a lot of, what was it? It was the bank of something was asking those, I think 27 central banks around the world, were they holding crypto, and only 19 of them responded. And I told you, I was like, do you understand the significance of these banks not using that extra money to like literally prop up their currencies? We found out that these banks have billions of dollars in Bitcoin, in spot Bitcoin, and also in ETF Bitcoin. They chose to take billions of dollars equivalent and literally go, yeah, where's the exit door? Like, how do we get out of this? It's very, very significant. It happens with any currency. If people are choosing to invest in ETFs and mutual funds and all these other things, it's because they see that, you mentally see that there's no way for the US dollar to do better. So you go, this is the only way for me to make money. People who invest in property, they're not explicitly doing it because they like the look of the home. They go, well, I've seen that property prices have risen by X amount, and they keep doing so year on year. The amount of property being bought up is super high. These companies keep buying up everything. Projections are showing that prices will be this in 10 years. It's outpacing inflation. It's the only thing I can do against inflation. Same exact thing with crypto and Bitcoin. If we're getting projections that Bitcoin's going to outpace all of them, and once again, throwing out they keep saying it, the $1 million Bitcoin, of course people are jumping into the market. Of course people are trying to buy Satoshis. Of course people are trying to buy what they can to literally not have to deal with the inflation and the lack of having assets that is going to, I don't want to say the word ruin, but the people who don't have assets are going to have a very difficult time. You understand that, right? You see that. So I applaud you if you're in this market. Even taking the chance of like trying to invest and putting your money into stuff and like learning more, because I really worry. I tell you all the time, I know a lot of people who have nothing, and I've been telling them and trying to convince them. You know how difficult it is to convince someone to do better for themselves, to invest, to put money away, to try and help for their future? You would assume it's like easy. It's not. It's not at all. Yeah, I knew it was going to be a bit of an intense video. Hope you're all doing well. Hope you're all having a great day. Morning, afternoon, evening, wherever you are, wherever the heck you might be, I do hope it's absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.